Hi, I'm Dongsheng. Welcome to Digging into China, where we explore China in depth to reveal unique perspectives. Today, I'd like to discuss the future of the Chinese yuan and whether the U.S. China trade war might extend into the realm of currency, potentially igniting a currency war. This is a profoundly significant issue, one with far-reaching implications for China's political and economic landscape. It represents a critical frontier in the competition and the conflict between the United States and China, perhaps the final battlefield yet to be engaged. Let me begin by sharing two key pieces of information. First, a Bloomberg report notes that U.S. Treasury Secretary Scott Bessent, a highly trusted member of President Trump's cabinet, has directly addressed the yuan. This marks the first time the Trump administration has publicly discussed the yuan. The article, titled "Bessent Rejects Worries Over Dollar's Decline, It Diminishing Its Global Role," offers insight into how the Trump administration views the yuan, whether it intends to initiate a currency war, and if a final showdown between the US and China is on the horizon. After all, a currency war is often the last step before military conflict. Whether this final frontier will erupt is what makes this report so critical. The article states, "The price of the dollar is not the essence of a strong dollar policy," Bessent said in an interview with Bloomberg Television. "A strong dollar policy is about taking long-term steps to ensure the US dollar remains the world's reserve currency," he explained, emphasizing that the Trump administration is actively pursuing such measures. It's entirely misguided to think China's yuan could play a global role, Bessent added. "It's a non-convertible currency. How could it become a reserve currency? Moreover, 1.4 billion Chinese citizens are eager to move their money out of China." Bessent's decades of experience in hedge funds specializing in foreign exchange trading lend significant weight to his remarks. Beyond his expertise, he is currently the most authoritative voice in Trump's cabinet on the yuan's future. The second report from Trade Treasury Payments is titled "Swift Report Reveals Significant 23% Decline in Chinese Currency's Global Usage." According to the latest Swift RMB tracker report for May, the Chinese yuan has faced a major setback in its internationalization effort. It has dropped to the sixth most active currency for global payments by value, with its market share falling to 2.89%. In May, the yuan's share of international payments declined from 4.3% in March and 3.5% in April to 2.89%. Its ranking slipped from 4th in March to 5th in April and now to 6th in May. Additionally, the total payment volume in yuan fell by 23% compared to April. Not only is its ranking declining, but the scale of transactions is also shrinking dramatically. It's uncertain whether this news has been reported within China. Amid U.S. China competition, U.S.-led strategies, and technological containment, the Chinese government has been pushing for yuan internationalization and de-dollarization. Yet, the latest SWIFT data indicates that the US dollar's dominance in international trade remains steady at around 50%. The current rankings are noteworthy. The US dollar holds the top spot, followed by the euro, though the euro's usage is less than half that of the dollar, creating a substantial gap. The British pound ranks third, and the Japanese yen is fourth. One might expect China to follow, but another country has surpassed it to claim fifth place: Canada. In May, the Canadian dollar overtook the yuan, pushing China to sixth. The Canadian dollar accounts for 3.11% of global SWIFT transactions compared to the yuan's 2.89%. Drawing on Bessent's remarks and the Trade Treasury Payments report, I'd like to share several observations. First, Bessent's decision to address the yuan publicly is significant. It's the first time in Trump's second term that his administration has openly discussed the yuan. While Bessent offered a few specifics, the fact that the administration is focusing on this issue is noteworthy. The yuan's international status is a pivotal aspect of U.S. China relations, viewed by the U.S. as a critical and a sensitive arena for a potential final confrontation. This discussion signals that the Trump administration remains attentive to this issue. Refraining from a currency war does not mean they've overlooked it. They are closely monitoring it. Given Trump's unpredictable nature, he could ignite this front at any moment, setting off a chain reaction. Second, Bessent's comments reflect the Trump administration's pragmatic stance on a potential currency war. He noted that the yuan's lack of free convertibility prevents it from becoming a global reserve currency, a straightforward observation. But what is the purpose of stating this? Bessent appears to convey two messages. First, his remarks suggest that the Trump administration is not planning to launch a currency war immediately, leaving this sensitive area untouched for now. This could, to some extent, reduce tensions in U.S. China relations, offering the Chinese Communist Party a moment of respite. Bessent explained why. The yuan, as a domestically circulated currency, lacks the convertibility needed to play a significant role in global capital or currency markets. The second message is more complex and particularly relevant for those in China. What will be the U.S. stance on the yuan? During Trump's first term, when tariffs were imposed, Xi Jinping's primary counter-strategy was yuan devaluation, offsetting U.S. tariffs by devaluing the currency. In a trade war without the currency war, how can the U.S. prevent the CCP from manipulating the yuan to mitigate tariff impacts? Bessent's remarks serve as a pointed warning to the CCP. Don't assume that the absence of a currency war grants you free rein to manipulate the yuan's value. In essence, the US is currently pressuring the yuan toward appreciation. Some critics and dissidents hope the US will crush the yuan using tariffs to curb Chinese exports while causing the yuan to plummet. However, that's not the current approach. Before a currency war begins, the U.S. strategy includes pushing for yuan appreciation. The higher, the better. Yet, the yuan is inherently weak. China's economic growth is slowing. An unresolved crisis in real estate, local government debt, and financial stability are driving its downward trend. From the CCP's perspective, excessive yuan depreciation threatens regime stability, as it could erode public confidence in the party or trigger significant unrest. Thus, the CCP is actively working to prevent yuan depreciation, and in recent years, the U.S. has also urged China to avoid excessive devaluation. This creates a peculiar dynamic. In its competition with the CCP, the U.S. isn't always seeking to undermine the party. On the currency issue, it's almost as if the U.S. is supporting the CCP. Bessent's stance continues the approach from Trump's first term. No intent to wage a currency war, but the yuan must not depreciate excessively. In this regard, the CCP welcomes this U.S. policy. Third, Yuan internationalization, heralded by President Xi as a major achievement, especially through initiatives like the Belt and the Road, has faltered. The Canadian dollar has now surpassed the yuan in global trade settlement systems. How do we explain the yuan's halting? One step forward, two step back progress. There are three primary reasons. First, the CCP lacks confidence in its governance. The party is well aware that the Chinese people distrust its rule. If financial controls were relaxed, entrepreneurs and ordinary citizens would rush to exchange their yuan for dollars. While China allows an annual $50,000 exchange quota, this is largely symbolic. Most people cannot access it. This is what Bessent meant when he said the Chinese people lack faith in the Communist Party. So why does the CCP resist bold reforms toward yuan convertibility? They know the public and entrepreneurs deeply distrust them, despite their effort to downplay this reality. Xi's rhetoric about a people's country rings hollow. The people would seize any opportunity to distance themselves from the party. This creates an uncomfortable reality for the CCP regarding the yuan. Second, the CCP's authoritarian system, now increasingly dictatorial, is fundamentally incompatible with a freely convertible currency. Xi's governing philosophy prioritizes regime stability and perpetual rule, his lifelong leadership, over economic progress. When economic growth conflicts with this goal, the economy is sacrificed. As the world's second largest economy, China should have the confidence to advance yuan internationalization. Yet, when Xi's notions of security or financial security arise, he halts progress. In this sense, the CCP's leadership is actively obstructing yuan internationalization. In the yuan's internationalization is trapped in a cycle of setbacks because actions have consequences. The CCP's aggressive wolf warrior diplomacy has created numerous international adversaries. Xi seems unafraid of making enemies, even embracing confrontational and provoking tensions unnecessarily. Before the West openly challenged the CCP, Xi was touting institutional confidence, essentially provoking other nations by emphasizing China's institutional superiority. This led to the EU's consensus that the CCP is an institutional competitor, a label Xi himself provoked. He claimed the time and the momentum were on China's side even when no one was confronting him, as if it were the moment to challenge the global order. This has deepened the rift between the CCP and the West, creating more adversaries. With more enemies, yuan internationalization risks sparking a currency war. The U.S. has refrained from initiating a currency war because the yuan remains a domestic currency, not a globally circulated one. This hostile international environment further discouraged the CCP from pursuing the true yuan internationalization. In conclusion, yuan internationalization is an unrealistic goal. Maintaining the yuan as a stable domestic currency is already a formidable challenge, especially with the looming crisis in real estate and the local government debt threatening its stability further. Thank you so much for watching. If you find this video helpful, please like it, drop a comment below, and hit the subscribe button right here. It really helps YouTube suggest my video to others. I'll be back with more content soon. Until then, be well.